Hi again, this is Rick with AmazingAccuracy.com, and today is July 25th, 2011. It is currently 8:34 p.m. Chicago time. We are back looking at the daily chart of the S&P 500, and we have just today confirmed a swing top for July 22nd, which was Friday. As you can see here, that the Friday's price bar that I've got marked here with my cursor is followed by a price bar made today with a lower low, lower high. This confirms July 22nd as a swing top. Prior to that, we had formed a swing bottom on July 18th, which was one day early of the forecasted date of July 19th, shown by this diamond right here. And currently we can see that this top was also one day prior to the current turn date, July 25th, shown with the following diamond here, the F date here. Now, what I want to show you here real quick, let's go to the monthly chart of the S&P 500. Alright, here is the monthly chart of the S&P 500, and as you can see, since putting in the bottom here in March of 2009, for the most part, it has been bullish in the S&P 500. If you recall that some weeks and months ago I stated that we should start looking for this summer to most likely produce a long-term cycle top in the S&P 500 in the stock market, and that if we get that as expected, and I don't see why so far we shouldn't, because everything appears to be going to plan, that we could see bearishness moving into the summer of 2012. Now let's just take a look at what we currently have here on the monthly chart. Now, as you can see, the current monthly high is shown here in May of this year. Then in June last month we moved lower. This confirmed May as a monthly swing top. Now, as we are in the 25th day of July, we can see that we have produced a higher high than the high of June. This has therefore formed a monthly swing bottom for the month of June in the S&P 500. Meanwhile, if you'll notice though that although the high is higher than it was of the high here in June, it is currently not higher than the high made in May, which is still our summer high as of now. Another thing to notice here is that notice the June low hit nicely on this time price support line that you see moving up here where my cursor is. Notice that the previous higher swing bottom on March 2011 also did the same. Notice that the previous top hit resistance in February of 2011. If you want to go back, we can see that there has been times where we have been hitting that pretty nicely. Now, here what we see is at the end of this square, we have seen that we have the May top. Will this resistance hold? Well, that is unknown, but right now it is a good assumption that it may most likely do so. That sounds like an oxymoron, doesn't it? May mostly do so. Let me just put it this way. Right now the probability is really high that May's high will hold. That what we see happening here in July, the rise in July, may have just exhausted itself as we end the month of July, as it hits resistance here. Let's magnify this view by now going to the weekly chart. In the weekly chart, we can see here that here is the top that was made in May. I'm going to expand this chart a little bit so we can see this better. Here is the top made in May. This was the week that ended May 6th, 6th being the Friday of the date. Each of these are dated using its Friday's date. If you'll notice then, that prices then dropped to make a weekly bottom during June, the week of June 17th. Since then, prices moved up to make a top in July 8th, the week of July 8th, and then has now come down to make bottom in the week of July 22nd. We were expecting a turn of events to occur during this week, as you can see here on the chart. The previous turns are not marked on the chart because we only keep the current and the near future forecast showing on these charts. Now, here's the deal. If you notice that last week, which is the week ending July 22nd, it not only made a lower low than the low of the previous week, it also made a higher high than the high of the previous week. This is called an outside bar because the range of the bar covers the range of the previous bar. So it is outside of the range. It covers both the low end and the high end. Currently this week, which is just today, because today is the first day of the week, we only have an inside bar at the moment since it has a lower high and a higher low. There is good potential that the high of last week could hold. At any rate, there is good potential that the high of July 8th could hold. Either one, there is good potential that this could occur, preserving the high that occurred in May. This is important when we are trying to time when the next move down will occur in the S&P 500 market. So right now, this being an outside bar for week July 22nd, it has the potential to either confirm as a weekly swing bottom, which requires that prices move higher above its high to confirm the low as a swing bottom, or prices do not go above the high, but then turn around at this time for the rest of the week, let's say, and the following weeks, and move down, taking out this low. So what you would have in effect is you would have this swing top followed by even a lower swing top, and then prices likely moving lower down into this next weekly turn period, which is around the middle of August. Now, the overall expectation is for the S&P 500 to move lower into the middle of August. Whether it does so off of last week's high or it does off of this week's high, wherever it might be, if it moves higher, the overall expectation is that from either this high or this week's high, prices will then move lower. You see, while we have this outside bar and a potential swing bottom or swing top in the forecasted area, it can be one bar off. That includes this bar then. So we can allow this to go up a little higher, maybe this higher, or even all the way to the top. It doesn't matter. But if it does so, it has the potential to become its own swing top, just like this is a swing top, this is a swing top, this here's a swing top, and so forth. Because all it would require is that it is within one bar of the predicted time period, and then it is followed by bars that will make lower lows than itself, thus preserving the high and confirming it as a swing top. So between these two bars, wherever the high may be, we are expecting that prices will likely move down into the middle of August. That is the prediction that is being made here, for prices to overall during this time period to move down into the middle of August. Now I am expecting that our May top will hold, and there is a really good possibility that our July 8th top will hold. And again, the reason why I feel that this has got a strong probability is because, again, if you look on the monthly chart, it is at resistance already right here for July. So to move higher than this July 8th high would make this price bar on the monthly chart start to go above this line, and it would no longer be a resistance that is holding prices intact as it is currently now. So right now it's looking really good to hold because it has stopped so far from advancing beyond that line. Okay, I hope that makes sense. So we're looking at this line here to hold its course. Let me just go ahead and mark that top. That top being 1354.50. We're looking for that high to hold. So even if we do get a little rise in price, we are expecting that this price area here will not be violated, or not be violated by anything more than maybe a few ticks, so that it remains within that resistance line we saw on the monthly chart. Excuse me. Moving on then to the daily chart. Here's what we have. The last F date on the daily chart forecasted a turn in July 19th. It turned out to be 1 day early, July 18th. That in itself is bullish when you have a bottom occurring a day early of when it was predicted. But here we have a top that has confirmed, and it too has occurred 1 day early. Early bottoms we know are bullish, but early tops are bearish. So we now have this bearish indication here. However, we have to be careful because since that top occurred 1 bar early, it still leaves room within the same prediction period for this perhaps to become a swing bottom. If prices want to move higher, it would be right inside this same prediction area, and then that itself would form a higher swing bottom, which is a bullish pattern as you continually make higher swing bottoms moving up. However, again, we're going to keep our eye on this 1354.50 area here that occurred early in July. And again, I will mark it here on the daily chart. And that is the area that we don't expect prices to violate, or not to violate by very much, due to the resistance that we noted on the monthly chart. So if we, either this high here is going to hold from the high of last week, or prices rise a little bit somewhere between where it is right now and up to around this line, overall we're expecting that the advance will not be beyond this, so that we could then therefore take an opportunity to sell this market down into the middle of August. These turns here are not in the middle of August. These are just your usual gyrations where you have prices going from bottom, top, bottom, top, bottom, top on its way down into the middle of August. And that is what's being expected. So here's the deal. We have currently made this lower swing top. If prices do tend to rise a little bit, let's say right here in the July 28th time period, let's say prices move up for 1 day, 2 days, that would probably be a really good time to sell this market. If it just continues down at this point, any rally you see would likely be a very good place to sell this market. Either way, on how you play it, overall, the expectation is for prices to not move much above or at all 1354.50, but rather to move lower to the middle of August. And again, thanks for watching.